Good afternoon, or I should say good morning, everybody. Welcome to the final episode of the Traders Mindchat show, at least under the Mara banner. What started out as a small conversation about trading psychology many years ago turned into something way, way bigger than I ever imagined. This show, in in a variety of ways, has changed my life. Hopefully, it's helped change some of your trading stories too. I want to say thank you. I want to start off by saying thank you to everyone that's here with us live, everybody that's been on this show, ever watched the show, contributed in some way. Thank you all for this amazing gift, this amazing honor. And even though this is the final Trader's Mind Chat under the Mara banner, well, we don't this we'll see what happens from here as far as the show and the channel goes. There will be approximately 30 minutes today for the show. I'm willing to stay way beyond that if we've got the chat going and a lot of comments and questions are coming in. So let me know that you're out there. Let me know that you're alive. And the one of the first things about this show, and the reason why I do it live, is to serve and to serve you, answer your questions, psychology related trade questions, um, questions related to really anything about trading. So, um, again, willing to stay for quite a bit after. Um, so, as far as the future of this show and of this channel, whether it evolves or rebrands into something entirely new, we don't know yet. What many of you probably know by now is that a few weeks ago, I was invited to be part of Minervini Private Access and Mark Minervini's team over at there. And that is, it almost, I've got to believe that this is what it feels like to be called up to the major leagues. Well, what the baseball players feel like, because man, oh man, when I first started my trading journey so many years ago, and even when I after the first decade of trading and falling on my face, and then eventually learning about O'Neill and Can Slim, and then a year or two later finding out about Mark, I never thought that I would be in a position where I would be reading somebody's book, then finally getting to be successful, building all this kind of stuff, and then later on writing a book of my own, having him write the forward to this book, and now be a friend and working with the guy. It's like a kind of crazy dream, but here we are. And the purpose of it, and the purpose of, or the reason I should say, why I'm so excited to be joining Mark and his team is because they're passionate in the same way that I'm passionate, helping people, helping regular people learn to trade, trade well, and to become extraordinarily successful at this. There's a lot of things that we need to be able to do and to be able to learn as individuals trying to trade in the markets. A large part of that, and why we developed this show in the first place, is because so much is driven by mindset. And so the first thing that I wanted to share with you guys is a little bit of where and how this really all got started. So uh, again, this show started uh, because I wanted to explore mindset and beliefs that individual traders face. And by individual, like, there's anybody on Wall Street, you could call them an individual trader. They're working for themselves. For us, for people that are working full time, heard about the market, and want to try to uh, have some long term success in that. That's who this show is geared for. That's where I came from. That's who I've been aiming to help this whole time. The challenges and particularly the mindset challenges that we face are somewhat unique because there's this balance that goes on where we not only have to manage our emotions in trading and putting on trades and trying to think, well, am I doing this right? But also the emotions that come with balancing uh, a job, a family, life in general. Like for most of us, trading is not the primary thing. Trading, well, in some cases, maybe it feels like it becomes the primary thing, but for the most part, trading is something that we're trying to work in and trying to get better at. And in that, there's so many beliefs that can ultimately help us or hurt us to getting to our goal of or whatever our goals are. And so that's why this show was created to explore those beliefs and help us to unpack some of the limiting beliefs that we might have. Um, in the 25 years of trading experience that I have, I've learned that it's far less about the individual strategies. We there's so many strategies out there. We've interviewed so many different people from so many different strategies. We'll get to that in a moment. But there's the strategies out there. They work. The thing that's the challenging part is finding the strategy that works right for you. One of the things that I've said a million times on the show, and something that I would tell people inside the programs that we've had and are now winding down, are that your whatever system you have, it has to match these three things. It has to match your beliefs, your goals, and your ability to execute. And if any one of those three are missing, then that's where you run into problems. You can have the best day trading system in the world, but if you think that day trading is a scam, you're going to run into problems. If you can't execute a day trading system because you've got a day job, that it's not going to work for you. And it has to meet your goals as well. So if you have a goal, not just a financial goal, but a goal of how much time do you really want to put into this, well, that has to be met as well. One of my favorite episodes uh, on this channel, it has to be when we did the whole Trading Mindwheel conference, full day conference when we were launching this book. I think it's been almost 3 years now. It's kind of crazy how time flies. But on that conference for the Trading Mind Wheel, we had Mark Minervini, who I told you wrote the foreword of this book. We had Jim Roppel, Adam Sarhan, Anthony Crudelli, Austin Silver, who came in and saved the day. We had a an MC scheduled for that day. Family emergency happened. Austin came in well with about 15 minutes to go and really hit it out of the park with his MCing job. All these videos, by the way, for the Mind Wheel conference, for everything that those are all on the channel. The channel itself is staying up. We're not deleting the channel, so all the archive stuff is all going to stay. We might, well, we not, we might, but we will be rebranding the channel, so you'll probably see it with a new name. Not exactly sure what it's going to be. If it's just going to be the Michael Lamott YouTube channel or something else, but the content will live on. And some of you might already see that there's some content that from our membership archives that's been put onto this channel, the YouTube part of the channel, and well, that's being made available. Decided to make that publicly available for everybody, so that way, not just the you've all been here for uh, such a long time that I really wanted to do something special. So we're opening up those archives, and hopefully you find them helpful. So those will be. I started to release a few of them yesterday. There'll be a few more up over the weekend, and we'll be releasing a bunch over the coming days. Um, One of the big themes. Talk about themes for a moment. One of the big themes that have come up, or that kept on coming up on the show, is beliefs, right? Uh, Go figure. Show called Traders Mindchat, and the big thing is beliefs. But beliefs really are everything when it comes to trading. It's no small thing. Our beliefs are our internal software, and it's what will get us to either act or not act on a trade, will get us to follow our rules and our discipline or deviate from those rules and discipline. And so, whenever anybody is struggling with trading, if you've been trading for a few years and it's like, oh man, I'm struggling to put this together, the reason that people struggle is the underlying reasons have to do with beliefs, right? And so there's so many different ways to think about beliefs too. So there's the different types of beliefs about money, let's say. So let's say that you have a belief that, I don't know, money's hard to come by, and you're in this trade, and you get a trade from somebody. You're a part of some service, and they put on large positions. You're like, okay, let me go and put on the large position. They know what they're doing. Let me follow them. And you've got all your money in this thing, or a big chunk of your money in this thing. Then all of a sudden, the trade starts to go the wrong way. You'd still trust the individual that you got the idea from, but your attachment to the money is creating this cognitive dissonance that the person that is running their service or putting on that trade, maybe they don't have those kind of problems. And so that's how you end up with two different people having the same system, the same strategy, but can have wildly different results. Now, until we begin to question some of our thoughts and beliefs, we we end up keeping them. That's why it's so important to ask questions. That's why we had that whole Trading Mindwheel conference. That's why I wrote this book and gave a whole bunch of exercises on what to do. And it's why I think of trading skills as a wheel, with mindset being right at the center of it, because mindset bleeds into everything. All of the different skills needed for trading are all belief driven, whether you're doing analysis or you're doing journaling, whether you're thinking about risk management and position sizing, or you're thinking about trade management. Everything has to do with beliefs. And so that's why trading success is kind of like a wheel, kind of like a bicycle, where if you are lacking any of the essential skill sets, it's almost like trying to roll down the street with a flat tire. It's not going to work. So there were a number of things that have come out from this Traders Mind Chat show that I wanted to share with you. There's just just so many things. I had this whole outline right in front of me, but even now, like the thoughts are like entering my head, and I'm struggling to try to organize this and put this together for everybody. Um, some of the messages that I've received from people as we've been in this transitional period um, throughout the duration of the show. So some of the bigger themes of the messages have been going from utter despair to going to clarity, where people have been maybe you had some success, maybe uh, you tell me if you've experienced this yourself, having a string of success, feeling like you finally turned the corner, and then I don't know, the following year, you have this massive drawdown. And if you've experienced things like that, you're not alone. That's a fairly common story where, like, if we're looking at something like, say, I don't know, the market. I'm just pulling up a chart here on my end. Like, if you're looking at the market from, say, the run up after COVID to uh, the beginning of 2022, and we had that wicked bear market. A lot of people were trading the same kind of way and the same kind of size, didn't know how to properly sidestep a market like that. And that's what can happen when we don't have all the tools or are aware of all the different tools and things that we need in order to uh, really have an awareness of what it we got to do to succeed in this. It's so much more than any one individual trade. It speaks to, and I know that I'm going on a dozen tangents here, and I apologize for that, but hopefully some of this is landing well. One of the most when you're putting on a bunch of different trades and you're actively trading, and let's say that you're trying to gain some traction in the market, it's important to be able to execute the same trades in the same way, but to have a mechanism where you'll be betting heavy when you start to win and betting light when you're beginning to lose. That's really the thing that can help you to grow an account and to be able to avoid major drawdowns. It's also the thing that helps to make this game a bit easier, because if we're picking the same kind of setups, then we could start to become a specialist at those kinds of setups. Let's just say that you're trading a flat base or a cup with handle or VCP, any one of those. And those are your setups. Yeah, you just narrowed it down to three, maybe you've just got two, one. And you're trading those same kind of things over and over and over again. Over time, you'll be able to pick up what are some of the good qualities of those setups. What are some of the what represents a flaw in those setups? And that'll help you to figure out, well, which pitches should I be swinging at and which pitches should I not be swinging at? If for example, for the stocks that I trade, I want to see the price action get nice and tight. The reason why I like to see it get nice and tight is because it helps me to limit my initial risk, and the upside is potentially a lot greater. And so if I'm able to make three, four, five times what I risked on any one trade, then that means that I can win without having a very high batting average. I don't want to have to rely on having a high batting average to win. Don't get me wrong, a high batting average is nice, but when we are relying on that high batting average to make money in the market, that starts to become a little bit of a problem. The reason why it becomes a problem is because everybody goes through dry spells. And if I end up getting into a massive drawdown because my batting average dropped from 60% down to 30%. That's no good. I would much rather a system where I could still be a winner at a 30% batting average than all of a sudden turn into a loser. Back to progressive exposure for a second, because I think that's another very important point too that I want to make sure that at least for those of you that are here that you hear this. Progressive exposure is one of the most important um, risk management tools at our disposal, especially if you're trading the same kinds of setups over and over and over again. The reason why is because the market moves in waves. The market moves in waves. So that means that you'll get a whole bunch of trades at once that will be winners, and then you'll get a drying off period where you'll end up with a losing streak. And sometimes you'll have a couple of wins, couple of losses, couple of wins, couple of losses, but the streaks tend to come in bunches. So if we start to find ourselves on a winning streak, then that's something that can tell us, hey, we should start to be betting heavier now because this is one of those waves that could really catapult our portfolio, catapult our performance. When things start to go the other way and we recognize that, then that's a time to be cutting our position down. A lot of people do the opposite. A lot of people will try to dig themselves out of a hole and start to size up as they're in a losing streak to dig themselves out of the hole, not realizing that they're just digging themselves further down. Don't do that. Saw a message pop in from Keith. Will the Mara YouTube page stay online with your videos? Yes, it will. It'll be rebranded. Um, the rebrand will probably happen some point next week. But if you subscribe to this, you'll just see a different name if you're already a subscriber. It might be, uh, it'll probably just be Michael Lamott instead of Mara since we're sunsetting the brand. But the videos themselves will continue to live on. And like I mentioned at the top of the show, uh, I'm taking content that was just members only. One of our members, Daniel, he actually went through our whole list of member archive videos. There's more than 100 videos that he went through. He picked out his favorites. He actually picked out like 45 of them, right? So like so many videos that were good, but he picked out his top ones and created a whole spreadsheet for me. Sent that over. I was able to go into the archives, download all of those videos, and I started to upload them to YouTube. A couple of them were published yesterday. We'll be publishing more of those archives in the coming days. And so you'll have access to all of that on this channel for free. Um, Caleb, late to the party. What you doing, man? Oh, just like all those other Mara related videos, this one will live on the channel too, so you can go back and rewatch any of this as well. But um, this this whole show, again, like it's meant to serve. So now that we've got the comments starting to roll in, as you guys have comments and questions and all that, just put it into the chat, because even though we're staying here for a minimum 30 minutes, if the comments start rolling in and we've got a lot of questions coming in, I'm willing to stay for an hour plus. So we'll see where things go. Um, here's a few lessons, a few mindset lessons that I'd like to leave you with. Some of the most important ones that have come up time and time again, and um, I'd like to highlight here. I think that one of the most common or one of the most important ones that's also misunderstood, so we'll dig into it a little bit, is letting go of control. What we want to let go of, as far as control goes, is trying to control outcomes, trying to force wins. That's not something that works in trading. Maybe you've heard this analogy before, but the market is like dancing with an 800-pound gorilla. Right? You're not going to be the one to lead the gorilla. The gorilla is going to lead you. That's what the market is. So if you're actively trading the market, hey, it's going to be the one that does the leading. That means that if you have a disciplined process, then if it generates a win, great. If it generates a loss, great. Your job is to be disciplined, have a system, have rules, and follow those rules religiously. That's it. Sometimes you'll have great runs, sometimes you'll have dry spells. If you're when you experience the dry spells, and you will, the solution is not to throw discipline out the window. Right? That's the worst thing that can happen because uh, if you throw discipline out the window and you open yourself up to, well, let me, instead of taking a 5% stop loss, let me widen that a bit. Let's put it to 10. Let's put it to 15. Let's put it to 20. You might get a couple of wins in a choppy environment. You might start to that trade that stops you out and goes and starts to rally. Maybe you end up holding trades like that. And it's like, yeah, see, I shouldn't have used those stop losses. I knew that those stops were a bunch of BS to begin with. The problem with that is losses work exponentially against us. So if you take a 5% loss in a trade, it takes something like 5.1% to get back to even, right? That's so fairly simple. You take a 20% loss, it's going to take something like 25% or so, or no, more than that, we'll get closer to 30 to get back to even, right? You take a 50% loss, you need 100% to get back to even. So keeping losses small is the way to make it in this game. We don't want our wins to have to dig us out of a hole. We want our wins to put our equity curve higher. The only way that our wins get to bring our equity curve higher is for it to not be digging us out of a ditch in the first place. So important to let go of control, let go of outcomes, and follow a disciplined process. With that in mind, too, we need to be able to cut losses without any kind of guilt whatsoever. So, cutting losses can feel very difficult, especially when if you're somebody that spends a lot of time and effort researching an idea. If there's a certain company that you feel like you know the company, you own the products, you love the products, you study the landscape of competitors within the environment. It's like that. This company is head and shoulders above everybody else, and the stock is going to come back, right? So if it falls, then guess what? The market is throwing me a sale, and let me buy some more. Let's double down on this idea. That rarely works out. And it's dangerous when it does work out because the market ends up rewarding a very, very bad habit. Not all stocks come back. Sometimes it takes years for stocks to come back, if they come back at all. One of the ideas, I'm pretty sure I mentioned this the story in the Trading Mindwheel, but years ago I had a friend before he and I were before I started to really get into trading and know what I know now. We had gotten into um, Citigroup together. This was when during the financial crisis and banks, the Citigroup was too big to fail. Had this lovely idea that yeah, well, let's load up the boats with this. He bought some. Well, I bought some. He put all the money that he had at that point, about 10 grand. But back then that was a lot to us. Took that, put it in, and it started to go down. I exited with about a 5-6% loss at that time. He kept on holding and holding and holding and holding, and before he knew it, he was down about 50% on the trade. That trade turned into a long-term investment because he kept on holding it, held it for about 2 years before it finally climbed back to around where he bought it, and then he sold out. That's a scenario that doesn't happen all of the time. He got very lucky to be able to get his money back, but it took him 2 years to get that money back. That's money that was tied up that could have been reinvested into another idea that could have been a winner, but instead, um, it does not pay to hold those kind of losses. Let's see. We've got a bunch of comments coming in now. All right, so let's see. Um, Let's see, Caleb, glad to hear the phase exponentially against. I've heard others say geometrically exponential makes more sense. Yeah, it does to me too. um, Keith, will your books be available on the Mara website much longer? No, no. So with so the Trading Mind Wheel, this one was published by Wiley. This one will last forever until people stop buying it and Wiley stops printing it. So for right now, this one is available. It's on Amazon. I think that Barnes and Noble still sells it, and the other retailers too. But the main place where people go to buy things, Barnes and Noble, not Barnes and Noble, Amazon, and it's also available as an audio book and Kindle and all that stuff. So this is on Amazon. Um, the other books, the workbook, the Mara Mindshift Guide, that one was also self-published. That one's on Amazon. That one I'll leave there. It's probably we'll need to discuss with Marco what to do with that one. I'm pretty sure that one will be able to live on. The latest one, the Trading Success Blueprint. That one I've been selling through my own website, through marrowwealth.com. It's available as a PDF. It has additional guides that you could get with it. That one will be on the website for a little while longer, but eventually that's going to go away because I'm not going to maintain the billing part of the platform because I'm not selling the main subscriptions anymore, and that one book isn't large enough to warrant spending several $1,000s to just sell that one item. So for now, if you are interested in the Trading Success Blueprint, that's a book that teaches you how to write a business plan for your trading. Very important to have a business plan for your trading. Um, Go get that now. Go to marrowwealth.com. You could download both the ebook as well as my business plan, and you're able to take those, read it as a PDF, print it out, and it's the one that I actually have. I printed it out and I keep it right in my binder here with all this stuff here. Yeah, you can see the executive summary and this business plan that I've written for my trading is about 20 something pages. I think 26 pages. Risk sections, a spiritual section, spiritual mindset, um, equity, clarity, all these things. Okay. Caleb, just had this debate with my friend this morning who is a good trader, who was saying maybe we should stop using stop losses and let ride for longer until it comes back. Uh, the problem with that idea, Caleb, is that that works sometimes. It works sometimes, but it doesn't work all the time. And over a long enough time horizon, that it inevitably leads to blowups because it's just going to take one stock that doesn't do well, that doesn't come back, that's going to tank a portfolio or give yourself such a drawdown where let's say that you're in this idea, right? Let's say that you're modest in this idea, and you put 10% of your account in it, right? No big deal. So you put the 10% of your money into this idea. It goes down. Oh, let me just hold it. It'll come back. And this is the one that doesn't come back, right? So, or let's just say that it takes a long time. So it takes, you're in this thing 3 months, 4 months, 7 months, 8 months, and it's still not coming back. It's just kind of, you're down, I don't know, let's say 20%. You're waiting for this thing to come back. There's other ideas that are coming, but now you're at some point, you're not going to be able to add more to your portfolio because you're tied up in this stock. You get a couple of those in your portfolio that you're just holding on to, waiting for them to come back. And it's tying up capital that could be deployed into something better. And now you're also dealing with the fear of, oh, I don't want to sell this one because the moment that I sell it, it's going to come back. And I've been holding on to it for so long. Trust me, it's not worth it. You're much better off just you live down south. You probably know about a little bit about tree trimming, right? And you have your property. It's important to prune trees. It's also important to prune stocks, prune your portfolio. If you fail to do pruning, then you're just going to end up with dead leaves and branches all over the place. It's unhealthy for the tree. It's unhealthy for your portfolio. Hopefully that analogy lands. Um, let's see, Colin. Mike, please tell us just a rebrand. We love your content. Oh, thank you, Colin. I appreciate that. Yes, it's just going to be a rebrand of the channel. The channel will live on. Um, it will be rebranded. How it evolves, right? So I'm not exactly sure if I will be publishing a lot more content on this channel in the future. I believe that that's the direction that we'll be going, but there's so much that's developing, that's in the works that Mark and I are talking about. We're talking practically every other day about my role and how that's going to evolve over time. With him and Minervini Private Access, how I'll be operating social media and that part of it. There's a lot that's up in the air, but there's so much that's really cool that's on the way. I'm not sure exactly what I'm allowed to disclose at this point, but yeah, there's a lot that's coming. And again, if Colin, I'm not sure if you were here earlier, but there's a lot of videos that are archived that were just members only videos that I'm taking and I'm publishing on this YouTube channel. So make sure that you check back and check out some of those archive videos as they become available. Though I think there's going to be about 45 videos altogether. I've released a few yesterday. There'll be a few more over the weekend. We'll be releasing those archives. If you check out those archives, do me a solid and like the videos, comment on the videos, share the videos, because that's what will help it get into the hands of more and more people. And that's what this channel is has and this show has always been about, helping people. Awesome. So let's uh let's keep it going. So spoke about letting go of control. Talked about cutting losses without guilt. Um, here's another big one that we should all uh, a big piece of advice. Stop saying this time is different. There's nothing new under the sun. I heard David Ryan say that a long time ago in relation to stocks. It's absolutely true. There's nothing new under the sun. There's that quote applies to so many different things. It definitely applies to stocks as well. The whole market is uh, driven based off of human emotion. That's the whole thing is uh, an auction system, right? You're bidding prices up, you're bidding prices down. Supply and demand. It's all it's all human behavior on parade. I believe Bill O'Neill had mentioned that, had said that years ago. Human emotion on parade. So, and we could see it. It's just like reading an EKG. Like you're seeing the waves go along on the screen. You could see people get excited and exuberant. You could see euphoria. You could see where when prices start to top out. You could see where when there's massive panic and fear, and there's loads and loads of volatility to the downside. Human behavior on parade. There is no this time it's different. Just the names change, right? The different stocks, different companies, different traders. It's all still the same. And if you're thinking, well, there's algorithms and AI, and there's not going to be able to do this. Well, if anything, it actually makes it easier and more efficient for us to be able to participate. Years and years ago, back when people were trading off of things like this. This is an old ticker tape that one of my members, one of our members, Jenny, she had sent this to me from. This is from 1971, a ticker tape from Piper Jaffray's when she worked there. It's actually, I don't know if you could see this or not, but it's from there's a quote from Alcoa way back when. What was it trading at? Looks like $4 and 80. I'm not sure if I'm even reading this right, but uh, yeah, looks like 79S 4.88. Yeah, I've got to learn how to read the old style tape, but man, oh man, is this thing cool? Anyhow, even from back then, right there's nothing new under the sun. It's all driven by beliefs. It's driven by emotions, and it's a lot easier now because we don't need to read little tapes coming through a machine like this. We have instant quotes. We have charts. We've got everything at our disposal. We have education from world-class people. We have AI that can help us begin to read and understand charts better, right? So the learning curve dramatically smaller because back then there's nobody teaching you this stuff. You're figuring it out on your own. There's better software out there now that can help you to do post analysis, do it smarter, faster. What sort of stats to look at? Crunch those stats for you if you're not a mathematician or an Excel guy. Uh, So much of that stuff is built into what Mark has built with Minervini Private Access. Like, I'm not trying to pump up that platform because I'm going to work there, but that's one of the big reasons why I was thrilled to go and make this move, because the platform truly is like it's mind blowing. Well, what they've put together, and it really is all the elements that you need in order to be a successful trader. So stop saying this time is different. This time is not different. It's the same kind of thing over and over again. And if anything, it's gotten easier. Next, detach from outcomes. Said that a little bit earlier, but specifically here, detach from outcomes. Don't be attached to any one individual trade. If this trade is a winner, wonderful. If this trade is a loser, wonderful. Did you follow your plan? Yes or no? Learn to look at trades in groups of trades. How did you do over your last 10 trades, over your last 20 trades? That's what matters a lot more than any one individual trade. That's what's ultimately going to lead you to success or failure. If you, over your last 10 trades, if you're 1 for 9 in your last 10 trades, and I've been 1 for 9 in the past, right? So that's something to consider and be like, well, what happened with those out of those last 10 trades? Was it market conditions? Was I taking high quality trades? Actually go back and grade your trades. See what you did right, what you did wrong. Um, how were you sized during those trades? Where did you start to see that, oh, you're on your third loss, where you're like, oh man, I just took 3 losses in a row. Maybe I should start to take smaller positions. How did you handle that block of 10? And then take a look at what your performance was for the past month, for the past quarter, right? And that's how you're really going to start to understand your own tendencies and things that you need to work on to help you improve. And finally, if you're going to identify as anything in the market, identify uh, with growth. Make growth be your identity, because growth is not a destination. Let me say that again. Growth is not a destination. A lot of people say that they want growth in their portfolio, they want consistency, and they might get it for a little while. But then when they get there, it tends to start to like and let me know if you felt this way, because I felt this way at times in the past too. Like it slips through your fingers. Why? The reason why is when we treat growth as a destination and not an identity. When it's a destination, we get there and then, well, we're here. So I don't need to do the work anymore because I traveled to my destination and I've arrived. Time to relax. No, no, that's not quite how it works. It's a trading, like think of trading like a flywheel, right? Like it takes a lot of effort to get the wheel going, but once you got it going, it takes less effort to keep it going, but it still takes effort to keep it going. Growth is an identity. It's not a destination. See a few comments coming in from Nitin too. Um, asking about individual trades, Tesla and Apple. Well, we could take a look at individual trades if you want to. Let me move this over here, and I can share my screen. Put Tesla up. Okay, so here's Tesla. Tesla got walloped on earnings on Thursday, down 8%. It's largely recovered today. Um, yeah, very nice recovery, up 5% on the day. If we zoom out, it's still just trading sideways here. And if we take a look at it on a weekly time frame, no, it's just moving sideways. It's been moving sideways really since May, right? It bottomed back here in April, ran up, and now it's just been moving sideways. And you could notice too, like you see how I have that red line and that gray line here. That's the gray line is the 40-week line. The red line is the 10-week line. It's just an average of what prices were over those time horizons. As prices climb back up to that red line and the gray line, now it's starting to find some resistance around those levels, right? So you could see how the buyers and sellers are arguing with one another. Yeah, it's a great company. Let's go. No, we need to sell it off, right? And so eventually one side is going to win. And that'll be the direction that price ultimately moves. But for right now, the buyers and the sellers are still having that argument, and price is just continuing to move sideways for now. At this point, it's not something that I would be looking to buy because the reward to risk isn't clear at all. The direction's not clear. The reward to risk isn't clear. So I would be holding off until it forms a low risk area to take action on it. And as far as Apple goes, let's take a look at Apple. I haven't looked at Apple in a minute. This one sideways too. It looks like it tried to bottom back here in April, and then started to move sideways here. It's above the 10-week line, but you can see too that it's below the 40-week line, and the 40-week line is starting to get close. If price were to break out from here, and let's just say, whoops, I grabbed the wrong annotation tool. Let's say that price were to break out above this high, right? Above this week's high and the high from 3 weeks ago. You're above 216.23. And let's put that in 216.23. And let's just say that we wanted to use, I don't know, if we wanted to have a very tight stop on this, we could put it below the last couple of weeks lows here. So we could use 207, looks like 207 and a half. That means that you would be risking 4% on that idea if you entered now and yeah, you place your stop down here. That seems like it's tight risk, but where's the upside on this trade? Where might the trade start to find some resistance? The first spot that it might find some resistance is the 40-week line. If it's finding resistance at the 40-week line, and let's expand this a little bit, then that's only about 2%. So you would be risking 4% to make 2%. That just makes no sense at all. Then let's say that it gets above the 40-week line. Well, now we look to the left and there's some potential resistance around the 225 level, right? Go back to March and you have this week's high and also all this noise from back here. Now we're in the 4% range, right? So it moves up 4% before it gets into trouble, or it drops off 4%. 1-to-1, that's not really what I look for either. I want trades where my upside is virtually unlimited and my downside is capped. So for both of these ideas, it's not something that I would personally look to trade. Um, let's see here. Well, what other questions came in? Yeah, don't yeah, don't close your live stream, sir. I appreciate it. Appreciate your support. So the like I mentioned a couple of times, the channel itself will still be up. But the channel will be rebranded. So make sure that you subscribe to the channel. Like if you're not already subscribed, subscribe now. So that way when the rebrand happens and the channel has a different name and there's probably my face on there instead of the Mara logo. It's still there and you still have it, and you're not caught off guard. Um, let's see. What else? What's your view on the Magnificent Seven stocks for investing? I mean, so, okay, all this, any stock needs to be bought at the right time. And there is a right time to be buying. When we analyze the stock's behavior, you know, we could pick out, well, is there a low risk time to be buying it? Right? Just like how we were looking at the charts of Tesla and Apple, and we saw that Tesla was wide and loose. We saw that Apple was starting to tighten up, and we went through, well, there's you might be able to buy it with 4% risk, but the upside might be capped right now. That's the kind of analysis that we can do to time our buys. That's one of the things that helps to give us an edge over Wall Street. Your major institutions of the world, hedge funds, pension funds, mutual funds, they can't fly in and out of a stock like we can. We could buy a stock today, sell it 3 seconds later, and be out of it. They can't do that. They need to accumulate positions over several days, several weeks, some of them even several months, depending on how much money they're managing. That creates a lot of opportunity for us because we're able to move so quickly. The tools to help us move so quickly are doing and learning how to analyze charts like that. It's not the be all and end all. I don't mean to force my own beliefs onto you or to anybody else, but that is something that has created a legitimate edge for so many people. For me, for Mark, who I learned everything from, and for many others. And that's why we're talking about it now. Um, but yeah, whether it's the Magnificent Seven or some other stock, the idea is to buy it at the right time. And the right time is when the low risk, high reward, higher probability opportunity emerges. Is the market overvalued now? Um, guess it depends on what your definition of overvalued is. Um, Am I still willing to buy stocks right now? Absolutely. Have I personally found a lot of those low risk, high reward opportunities? Not yet. What I've seen in the types of stocks that I like to trade, I've seen a lot of choppiness lately. A lot that will go up and then fall right back into the base that it's had. That tells me that we might be due for a pullback, or at the very least, it's time for me personally to be patient and to practice what my friend Mark Minervini calls sit out power. And it's, you know what, it's actually fairly easy to sit out when everything is going down, right? In a bear market, there's no trades, the general market is going down. Very easy to sit on your hands and be like, oh, I'm so glad that I sold when I did. The tough time to sit out is now. When the market is going up, some stocks are going up that broke out much earlier and just continuing to move higher, like your Hood of the world or the Coinbase. I haven't looked at Coinbase today, but Stocks like that that have just they're up and they're extended. I feel like, oh man, the indexes are higher. I should be making money. And then if you're just sitting there and you don't see your setup, this is when it's tough to learn how to sit on your hands and wait. That's what being disciplined is. That's what setups are. It, you know, if trading were easy, everybody would be doing it and we'd all be billionaires by now. But uh, the challenging part is the mindset and the discipline, and it's why it truly does pay to dig into our beliefs about trading and money and about ourselves, and to understand why we tick, and to not just do that but to study people that have been incredibly successful at trading and try to understand what makes them tick so we could adopt those beliefs and not get derailed. And it's why I wrote the Trading Mindwheel book 3 years ago. Let's see. Kim Scott, hello. I think, Kim, you might be the first person ever to comment from Twitch. So, welcome to this episode. It's the last episode. Um, Nitin is asking to analyze gold and silver. Gold and silver. Well, let's take a look at gold and silver. Well, where did I put my charts? Hold on 1 second here, and we will analyze gold and silver. Yikes. That's what I've got to say about gold right now. Oh, man. So, if I'm looking at this pattern, it seems like it could be a triple top where you have this top here, this top here, this top over here, triple top, and now it's sold off, closing at the low potentially of its week. We still have a few hours left in the day, but trading at the low so far of the day and of the week. That coming in on heavy volume. That red line again is the 10-week line. Not looking good. Not looking good for gold at all. Let's take a look at silver. Not as bad, but I still don't like it closing at the weekly low. It's extended. I'll say that much. Right now, let's see how much price is above the 10-week line. Let's see if this tells me the price data. Oh, this indicator. That indicator is not working. So let's see. We are about 5% above the 10-week line. If we just zoom out on silver and take a look, well, how far does silver typically get above the 10-week line before it starts to pull back? It almost looks like, if we just take off the annotations for a second, take a look at this move in silver versus this move in silver. To me, it looks very, very similar. So if silver were to pull back to the 10-week line, maybe test $34, I wouldn't be surprised. I think that would be a natural reaction. I think that in order for silver to break down or to really get into trouble, it would need to start to fall below 33 and change, or maybe get into the 32 90 mark from the beginning of July. That's where I would look for silver to get into trouble. But if it gets support around that level, it could end up being a spot to begin or to add to a position if you're a longer term trader. Lots of ways to think about it. Now that we're at the, this is always the way that it goes. It's always when it's the 1 hour mark and it's like, oh, let's start wrapping things up that we start getting loads of comments in. But that's okay. That's okay. I will stick around for a little while longer, but let's read some of these. Luther wrote, Mike, I just wanted to thank you for all the work that you've done for us retail traders. Oh, thank you. That's very kind. I have thoroughly enjoyed your videos. I wish you well on your new journey with Mark. Yeah, thank you so much. I can't wait to get started. Official start day, August 1st. Can't wait. And yeah, and for those of you that are also tune into IBD Live, they're actually having me back on August the 8th. So looking forward to that. Um, let's see. Luther, thank you very much. God bless you too, my friend. Keith says, just curious, what do you think of seasonal type trading? Stock A in the past has gone up 90% of the time in the last 20 years from, say, July 25th to September 1st, and still using regular tools to enter. For stocks that have been trading for a very, very long time, they tend to not be the big growth and momentum type names that I personally will generally trade. So um, if you're most of the names that have been around for a very long time tend to be a little bit slower movers. If that sort of seasonality, if you find that seasonality works, I think that you and you're building a system around that, I think that that could work. So, well, let's think through this. So you've got a piece of software that looks at the seasonality of the stock. It shows you that 90% of the time it moves up favorably. You could take that as a qualifier or something that tells you, okay, this idea has a stronger chance of working. I would use that in part, but not in whole, meaning I would still want to see it setting up in a strong pattern. I would still want to see it giving me a low risk entry point and have that lined up. And then on top of it, say, oh, yeah, and by the way, this tends to be a great season for it. When all those stars start to align, that's when I would say, all right, let's go. That's my 2 cents on that idea. Hopefully that helps. Um, how to identify if silver is changing its trend. So let's take a look at that chart again. Oops, move that over here, move this down here. Okay, so for silver, if silver's changing its longer term trend, we'll start to see this 10-week line start to roll over a bit. Like, so you see over here when silver was starting its uptrend and you have that red line moving up and you have the gray line moving up, and then it's climbing, it's climbing, it's climbing it. Now it's testing that that red line, and then over here it starts to fall below it, and it stays below it between July, and it finally gets back above it and stays above it in September. And you had that red line going down for a bit. That was a sign of a change in trend. So you're above the line, good; below the line, bad; line rolling over, really bad. And so for this whole period here, right, when you're starting to curve down, then it's back up and it's down again. That's it. You barely price barely moved, right? Like if you bought this here, let's say that you bought silver at 27, you and you held it through from May of 2024 through March of 2025, you're still sitting with no gain. It's not until now that prices really started to move. That's why it's not just about getting into a name with seasonality or with anything, it also needs to be set up properly. It needs to be offering a low risk, high reward way to get into it. And even though price is up now, like if I bought silver back here and I'm just sitting with it for all this time, if I'm long term, I'm happy. If I'm a swing trader, I broke I don't know how many rules just sitting and holding this thing as it falls apart and then comes back, and then I'm losing time. That's the problem. So we need to figure out what kind of style suits us, and then trade that kind of style. And that goes. And the way that we do that is by figuring out our beliefs, our goals, and what our ability to execute is, and then we could figure out the system and the style to trade from there. Oops, hold on one second. My screen is getting a little bit funky. Let's see. We've got somebody else from Twitch. Wow, we've got a few different people from Twitch. I think that this was just a spam bot, but I'll take it for Twitch. Um, One last question from Nitin. Uh, can you share some stock ideas for investing for 5 years in US? My time horizon, my average holding period for a trade is typically about a month on winners. If a stock tends to be a really big winner, I'm holding it for probably about 90 days. So my outlook is not that long. So much can change in the span of 5 years. To me, it's for my style, it's not worth thinking that far into the future. Now I can think about things like, well, look at everything that AI is doing and how AI is evolving. Do I think that that's going away anytime soon? Absolutely not. I think that it's going to continue to evolve. But am I going to place trades based on that and kind of sit and hope for the best? No, no, and have a widely diversified portfolio of like say 50 or so names. Well, even if one of the 50 names hits, I'm so diluted that it's not going to be that meaningful of a gain. So why bother with that? In that case, I would be better off just buying like the triple Qs that mirror the Nasdaq 100 than just trying to pick individual names at that point. Um, Luther says, how would you scan for stocks in the AI theme? Um, there's a variety of scanning tools out there that will tell you exactly what stocks are part of which industry groups um, and themes. So AI is more of a theme versus a specific industry group. So, for example, NVIDIA, people consider that to be an AI stock, but how is that part of the AI theme? It's a semiconductor because the processing power for so much AI comes from NVIDIA's chips. That's how it's a part of it. Tesla, it's a car company. That's part of the AI theme. So part of it is understanding some of the broader stories, I guess, behind those names. Um, Part of it can come from seeing how seeing how different stocks are if you're using and testing the different ideas that like that if from William O'Neill, from the Can Slim, from understanding the newness part, where the so whether something has the news or the story or something new and exciting about the company, that's where diving deeper into the individual companies can start to help, and you will start to understand themes better that way. I don't know if there's a specific ETF that tracks just AI stocks, but if there is, that would be a route. Just like how there's an ETF that tracks semiconductors. You would be able to go into that ETF and see, well, what are the holdings? And that's a way that you could get up to speed very quickly on the themes. If you find an AI ETF like that, then that's one way that you could do it. Um, and love from 1 billion people over in India. Thank you so much. God bless you and God bless everybody over there. Okay, let's see. Well, what else do we got? Um, what else? What else? Yeah, so as I've mentioned a few times, uh, officially beginning on August 1st, I'll be with Mark Minervini and his new platform that he's built, that Minervini Private Access, Minervini Markets 360. The platform itself is wild. It's far more than charts analysis, and of course, all the education and research that his team gives. Um, he's built the platform in a way where AI is actually integrated into the platform. So you're talking about an AI theme. He has AI built into the platform where it'll you could go bar by bar on any stock, and it will tell you the confirmations that, hey, this is what Mark looks at for something that's good, or warning signs that, hey, look out, that this is a violation here, a violation there, and you might want to stay away from this one because it's getting down. He also built in AI where you click a button and it analyzes the chart the same way that he would. That part's wild too. Um, yeah, so I'll be officially over there starting on August 1st. Obviously, I've already been diving into the platform and learning it because part of my role is to become an expert on that platform and help to onboard new members there, and to start teaching and coaching there too. Um, as far as this channel goes, the channel will still exist. It will be rebranded. Make sure that you like and subscribe the same way that you always have, and just look for a new name. Probably it'll be the Michael Lamott YouTube channel. I'm not quite sure yet, but look for that to happen probably within the next week or so. Um, and you could still follow this channel. If you're over on, say, X, I'll still be on X. I'll still be posting. Make sure that you're following me over on X, Michael G. Lamont. And I'll still be active on social media. None of that's going away. I'm just doing the same kind of things that I was doing at Mara, but just in a new home, and being able to do so with far greater focus because I'm not worried about the other stuff that comes from uh, having your own business. Right? I'll just be focused on coaching and helping people, and that's really what I'm passionate about. So, um, yeah, I think that that's a good spot to end this now. So, thanks for being here for this journey. Thanks for all the great memories and time. And yeah, I'm not saying that this is necessarily the end of the show itself. It'll be this is the last show underneath the Mara brand. The next time that you see me do this show or live stream anything, uh, you'll see it with maybe a different background, but it'll still be me giving content and being here to help and to serve. And I feel extremely blessed to have been here with you guys for the last for the duration, several years doing this now, and what a great opportunity it's been. Wherever you are in your trading journey, I wish you nothing but the best, all the success in the world. And if there's anything that I can do to help you, please feel free to reach out to me on any of the platforms, and I'll do my best to do what I can to help you. All right, the last time. Uh, for now, take care, much love, and as always, God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.